Welcome to Momentum Monday. Today's May 29, 2022. We have Howard Lindsay as usual, and also Shiv Sharma, who is one of the guys running StockTweets, based in Singapore.
Yeah, Shiv, why don't you introduce yourself? It's great to have you.
Sure. Hey guys, so been a long time watcher. Have actually watched the show for almost 3-4 years now, regularly. Learned a ton from both you guys, and so really appreciate what you do. Have been an investor for a long time. Started off in New York, the whole investment banking, private equity thing. Worked in both public equities as well as private on Cisco's venture and corp dev team, where I met Howard, and then was with AWS for a while in Singapore. Now I run StockTweets India. So here we are.
We'll touch on India. Like what? I mean, go through the markets, and we'll touch on Singapore and India.
Yeah, I mean, last week, especially after the Fed minutes were released, we kind of saw a pretty substantial widespread bounce.
Yeah.
Probably a bear market rally, but we're not going to judge it too early. As last time we had like that huge bear market rally here in March, we have the same situation. Energy is leading, so a lot of natural gas is a 12-year high. Crude oil is near 10-year high. So a lot of energy, oil, gas stocks went up about 20% last week. So pretty substantial move in the entire sector. And basically other alternative energy sources like solar are also trying to bounce. Lithium was a huge winner.
Huge.
Also big moves in Livent, I don't know how to pronounce that. And also ALB and LAC, like anything in that space.
Yeah, SQM,
which is like the one from Chile. They bought a fertilizer and also lithium. All-time highs, huge move in the past few weeks. And I mean, there are not that many really price momentum stocks right now. And all the growth investors, all the momentum traders are basically watching a small number of stocks. And maybe this is why we see these moves in energy and lithium. There are not that many of them on the 52-week high list, and everyone is basically piling in on those, and we're seeing those big moves. You see the second the pressure from the general market was removed, and then we're seeing those stocks that were kind of building bases, breaking out on pretty significant volume. So these are kind of the new old leaders in a way. What are you seeing, Howard?
Well, I got so much to talk about, but yeah, it's really been a tale of, as we see it. It's nice to get this bounce. I don't follow a lot of people, so it's guilty until proven innocent on if this is a bear market. But sentiment was pretty bad, like including myself. Like sentiment, even though I was buying, sentiment was bad. And that helped. The panic wasn't there, but again, like it's such a tough read on panic because the super rich were getting hurt. Like the young rich were getting hurt and the super rich.
Really?
And the energy people are quietly gobbling up billions of dollars while politicians fight with billionaires. Like Biden's fighting with Bezos online, Elon's fighting with everybody. And Exxon's quietly printing all-time highs while they continue to scorch the earth. So it's a beautiful, weird,
almost there, yeah.
Awful, yeah. But with dividends, this thing's like the home run.
Yeah, obviously, yes.
And if we squeeze back on Exxon on the weekly, forgetting March 20 when it went negative, and I bought some just because it was like cool. And I flipped it. There's, look at the retest in December of 20. So, these are lessons for however the tech, you are not going to have a V bottom. So forget about it. If you really want to do work, now's the time to start doing work on growth stocks, because you're going to have, even if they bottom, there's going to be all kinds of retests here and missed numbers. I mean, you worked in Cisco and Amazon. Give us some feedback. Like they're human, like they make mistakes too, or they panic they start cutting people right now. And then, everybody's business is disrupted.
Snapchat guided down, yeah. Mhm.
So one thing that happened, like back in 09, I actually tweeted this out from Meritech Capital pretty recently, right? Is when, now multiples look better, right? But like Salesforce back then went from like, I think 6-7 times revenue forward to like 1.5 times because estimates, but then kept getting cut. So we haven't really seen that yet. And so if IT
Right, you've
budget-
had the price.
So
The price
back in
and
the
the PE ratio has come down, but we don't know what the earnings will look like.
That's exactly right. So back then, Salesforce was growing 50%. Then, like at the bottom, it was then growing 20%. So it may have looked cheap, but the estimates kept going down and down and down and down as IT budgets got cut. So we haven't seen that impact really in enterprise software yet. Now, Snowflake mentioned it a little bit because it's more consumption revenue, which is why their stock was down last week. But generally, you haven't seen that in enterprise IT, which is a lot stickier than consumer and ads and those kind of things.
I mean, because of the run in Salesforce, it just looks like a blip, right? I haven't whipping.
Yeah,
but
absolutely, yeah. I mean,
but
almost anything went down 60 to 70%, anything in
including
tech.
Apple, right? Like
Apple and Amazon, yes. Yeah.
So the difference right now is if we pull up the banks like Goldman Sachs and JP Morgan, they could not be healthier, right? And let's just say Goldman because they're like a mix of venture, private equity, and trading. So they love vol. Like think about what was going on. They had to be saved in 08 by Warren Buffett. They are not even close. They are licking their chops right now. And then if we go to JP Morgan, okay, this is not 08. So this is different. This is a tech and interest rate, ratcheted expectation. This is really affecting the private markets. And, people will hide this stuff for a decade if they can. So in the public markets, it's been painful, right? But it's really painful right now for the people that have not had to look at their 60-40 portfolio for 20 years because it's just worked. And now they open their statements the last few months and they're seeing truly down 20-25% in their long-term portfolio. That was a 60-40 portfolio. There's been no shelter. And then I'm going to share my screen because I think the most important thing about how mispositioned everybody is. I'm going to show, can you
Are you sharing?
Yeah, can you provision me?
Yeah.
Am I allowed to share?
You're sharing right now.
What are you seeing?
You
see,
Zoom. Okay, now we're
see
seeing
my-
Koifin, yes.
All right,
Yeah.
so let's just take a look at really what's going on here. And this is a great, everybody who doesn't use Koifin, yeah, I'm biased. And, I don't know if you use, Ivan, you don't really care about fundamentals, so you don't use this. Shib, do you use this at all?
I do use it quite a bit, actually, yeah.
So here's a couple tricks that Rob showed. I mean, not tricks, because this is idiots. Like I didn't even know this existed, but you can see how out of place. So if you go into any ETF, so I can type SPY, enter, and then click on holdings. This is really important to see here in the weighting. We can see what's really, energy just is up. So energy was like 2% of the S&P when it bottomed in 2020, right? And if we think about how stupid we were at that point, like it was so underweighted. And if we go to right now, it's information and consumer discretionary are almost 40%. This is after they're down 30%. So the whole world was leaning towards tech and information technology. And if we go to QQQs, enter and you go, and this is free. Like, so I just don't understand why people aren't using this, but you can see that information tech, which is Apple, Microsoft, Google, Facebook, not even Tesla, were 50% of the Qs. So basically, if you're buying, like, if you're buying the Qs, which is fine, that was fine, right? And you throw in Tesla, which worked its way in NVIDIA. So you're 50 to 60% of the portfolio. So everybody was leaning, whether they understood it or not, to FANG. in energy, which is like when we think about oil at 120 barrels a day, $120 a barrel, what were we thinking? It was negative. So probably the trade of a lifetime for people that had an alert or just had any kind of instinct towards, how markets work. There was a great trade there. I go back, Ivan, I'm going to stop sharing right now.
One funny story for you, Howard, on energy is that like back when I was at Cisco, hedge funds would call me to like understand about Smartsheet and Twilio and Zendesk. And
no,
now,
they'd all given up. Everybody was in the pool.
No, this is back like in 2016, right? And then now I have friends at funds who are like trying to get smart on energy, who are trying to hire good energy experts and stuff. And they just don't have that talent because everyone now understands software and fintech, but no one.
Yeah, everybody was just buying it, right? And this is, Ivan has a different scope because it's just, I've been looking at the trending list for a year on StockTwit, the momentum list, and I'm seeing energy. So if I was just starting out on my own, and I'm not managing other people's money, and I could blindly own these things, but I'm at the point where I don't own a lot of stocks, so I want to own things that I know. And I think that is the real problem, is that everybody was leaning one way. The real question is, does energy become 10% of the S&P? And that's where you have to start thinking about it, because you can't chase energy right now. Let's look at XL. You can't chase it. I've been watching it all year. It's paid to kind of buy the dips and to chase it. But now, like you said, now this momentum won't die quickly because policy is way behind. And, kind of Russia's got the upper hand at this point on Europe. But you have to still be disciplined. For those that aren't disciplined, listen, there's tons of swing trades. There's tons of momentum trades in energy. And if you're scalping, you can get up to 20,000 shares in some of these big names and scalp it. But like for real money being put to work, what you have to think as a small investor is what you're hearing about people hiring energy out is going to persist for a year or two. And that's just, will energy become 10% of the S&P? And then the next question is, when is the QQQ, which I shared, they have zero allocation in the QQQs to energy. So if it's 0%, right, what happens? That's more long-term how I'm thinking about this. Short-term, Ivan, like what you said, short-term, it feels like there's a tradable bottom in a lot of these tech names. So even from I'll go to the ones that we all followed, and Shib knows a lot more. I talked to Shib back channel on WhatsApp about some of these companies, and he explains them to me because he worked at Cisco and Amazon. But like Datadog and Snowflake traded down, and NVIDIA, and reversed. Okay, so there was some real buying, not huge moves, but there was some reversals off these lows. And so there's an inkling of relief now. And, if you want to trade long against those lows last week, great. I may do that myself. But these things are still so expensive. So Shiv, how do you see it as someone who is also just a tech guy?
That's exactly what I have done, is last week traded off the software bottom. However, I would say if you look at fintech, I think that's where multiples are way cheaper. So Marqeta, for example, got 2 times revenue.
You got Ivan with the knows the tickers here. Yeah, Marqeta.
I know it because I traded it. So
that one. Okay. And then look at Bumble. That's shown up really well. That's a new name that's kind of back in a upward trend.
The dating app Bumble. Yeah.
Yeah. So stuff. And then AVAB, we were texting about, I'm surprised defense hasn't gotten more love.
All the defense stocks are kind of setting up. Yeah. It's not the only one. But
yeah. In kind of this type of market, the defense stocks do well. Yeah. We talked about that a few weeks ago. I forget the ETF for the defense stocks.
There's so many of them. This one is DVN is leveraged, but yeah, ITA is it's
so
choppy.
Certain stocks look better. The other thing that I think people aren't talking about, because Ivan, you alluded to it earlier, was Snapchat.
Yeah.
They didn't even mention, Facebook mentioned Snapchat 5 times on the earnings call. Snapchat just fucking is in denial. And it is a good lesson for me in TikTok. Okay, so TikTok is a $360 billion company. Shiv, are young people there all TikTok?
Yeah, it's pretty heavy TikTok in Asia, not in India. India TikTok is still banned. So Snap
Well,
is
India's banned, so they have their own version.
correct, and they also have Snap in India. I think like similar to StockTwits, that's kind of going to be their second biggest market and the second biggest focus and things like that. So, pretty similar.
So Snap is done, right? Like they really have done this a few times. They're in denial. I mean, Facebook at their size is going to change Instagram to compete with TikTok. I think what is a great lesson here, because I don't own Snap, but I own some Facebook and I own Netflix and I did own Spotify. So if we look at Netflix, that is who Snapchat, for now, I'm sorry, TikTok. TikTok's free, right? And everybody under 30 or under 25, which is where Netflix has to go to hook up their next customers, is on TikTok. And they don't even care about if their parent cuts them off Netflix, will they pay? I don't know. And the same thing with and TikTok's, all their users, I'm sorry, like they don't have to pay for creators, right? So I think, TikTok is really at 360 billion, kind of flipped the model. Netflix is now just 80 billion, I think. And I say that with no one saw that coming. And I think the lesson here is, much like it was with Facebook and Instagram, because I don't use TikTok, not only did I miss TikTok, but I think I missed the damage that the attention that TikTok was getting from young people spending all their time on TikTok. It's affecting Spotify and Netflix. Netflix and Spotify are fantastic businesses, and I'm super bullish on both of them. Less so on Netflix at the moment, just because I see them spending money on ads. I can't believe Netflix has to buy ads on the NBA finals, to promote Stranger Things. That kind of blew my mind when I saw that. Now, again, I don't know about media and branding myself, but it really was whoa. Netflix, aren't they supposed to be able to serve Stranger Things to all their users the day it launches? And here they are on the NBA finals doing that. I also saw an Etsy ad, which kind of blew my mind. Seeing internet companies do TV ads kind of has blown my mind. So we covered that. Let's talk about the markets in India. Shiv, what are you saying? What's some American stocks that's a feel for what's going on in India
So just kind of zooming out, right? So India kind of outperformed the US off that COVID low. And that was heavy because as rates go low in the US, emerging market is a long duration risk on asset class, right? So you saw quite a bit of inflows into Indian markets from overseas, as well as emerging markets in general, followed by the whole geopolitical issues, right? And then in India itself, you have a pretty high savings rate. So you saw a big chunk of that be reallocated from gold and real estate into equities for the first time. So you saw brokerage accounts go from 40 to 90 million from the COVID bottoms to now. So that's a really serious step change in cultural behavior, right? And so that's kind of what's happened. And the way India is different than the US is that India is primarily financial services and the main indices, followed by IT. And IT is actually not software. It's TCS, Infosys, and Wipro, who are outsourced consultants, right? Who are more the system integrators and things like that. And so that's how this the whole market's made up. And the other big thing is that while in the US technology is a secular trend, right? In India, everything is a secular trend. Infrastructure is a secular trend. Cement is a secular trend. Retail and urbanization is a secular trend. Financial services and large cap banks HDFC is a secular trend, right?
Travel is a secular trend.
Travel is a secular trend. So the whole market is a secular trend. So it's while they're all cyclicals, you do have secular trends within that. And then the most recent thing that's happened is like the whole venture ecosystem of US LPs investing in Sequoia and Lightspeed and all those kind of VC names in India who have now gone public. So now you have like Paytm and Zomato and Policy Bazaar and Nika, who all went public at 20 plus times forward revenue for B2C consumer businesses, right? Who are, not really like reinventing the world, right? Like they're cool offerings and have good product market fit and growing, but like serious CAC issues and serious very serious cash flow concerns, right? Who all went public at almost peak valuations. And you've seen those get cut from like 25x to like 5x.
Oh,
so that's
so
been like
they're hammered. So just like US tech, they've been hammered.
worse, like probably slightly worse, I would say.
Just because the market's not fully developed.
Yeah, exactly. And so that's what's happened in India. It's been ugly, but like still, if you compare the Indian indices to the S&P, it's still held up better. And so that's quite a good thing, I think. Having said that, like you do see some kind of margin pressure because India does import 85% of oil. So you're going to see that roll through. The commodity stuff's going to roll through. So we'll see how the back half of this year goes. But that's
and
what's
the smartest ticker to follow for like tracking India? Is it IFN still, or is that? Obviously,
I don't know if there's a new US ETF. The Nifty 50 is the core index in India. So I think they.
Well, this is the one, INDY.
Yeah.
So yeah.
INDY.
Yeah.
So you're saying India is outperforming, even considering the strong dollar and inflation?
Yeah, it's a good point. So like, if you look at like, I think so we have a show, but then by the way, called Stockroom Sunday, which is the Indian version of this show, by the way, Howard and Ivan. And so, so on that show, we did an analysis, and like the drawdown from peak to trough in India has been less than the US.
Even with the US dollar being strong.
Correct.
And the size of it, is there a Robinhood of India? Like I know there was lots of things funded, but is there one that everybody's using?
It's Zerodha, and it's private, and they spend nilch on marketing, and it's an amazing business. It's private, very limited marketing spend. It's the kind of de facto tool.
And what are you saying with Stockroom India? What's kind of been the mood?
Well, we haven't launched yet, to be clear, Howard. We're still kind of, because we're still localizing and things like that. But we're seeing an insane appetite for stock twits in India, right? So like you see so many people who are deep into trading, and because the market's so cyclical, there's heavy momentum opportunities in sectors like sugar and cement and autos and things like that. So the whole trading, I guess the momentum position trading strategy, swing trading strategy works really well. And like we're in the US, you see on YouTube, everyone researching Tesla and Square and Cathie Wood. In India, everyone's kind of searching, how do you trade? And like, what is technical analysis? What is candlesticks? And so that's where we're seeing an incredible opportunity. As well.
That's why I remain bullish. It's just so many. What do you think so what is there? 15 million Robinhood users. Obviously, the wallet size will be bigger in the US. Yeah. How many people could, if Robinhood's at 15 million people, if there was an equivalent, like what is the size of the monthly active user base of a young mobile trading class in India?
So it's like likely in the sub 10 million. So it's like 5 to 10 million is what Zerodha.
Oh, so it's still undeveloped. It's still time. No, but what could it be? Is there like 50 million?
That's a good question, Howard. That's a TAM question that I think people have lots of arguments on how big the market is. So I don't want to get into that stuff.
But it's still very nascent.
It's nascent, and there's 90 million demat accounts, which means brokerage accounts in India, which is not unique. So even if you cut that in half to 45, that's the 45 million. That's the number of like, that's a number basically.
Got it.
Okay,
it's going back to the Qs, Ivan. I think that going back to just kind of what I follow.
Let's wrap it up, Howard, because I gotta go.
You gotta hop.
Yeah.
I think we're learning a lesson here, and I've said this about a month ago. Is that when the XLE started outperforming the Qs, I think that reign of QQQ is over. Not that XLE is the thing to own. I just think I'm just not sure. It was just too much Apple, Google, and I think the hammer has been laid. I don't know where this all goes down, but it's just a really interesting time. As for a bottom, Ivan, I mean, 20%, only 20% of the NASDAQ 100 companies were above their 200-day moving average, and that generally signals like some kind of significant rally starting. Very hard to pick stocks in that type of environment, so I generally hold indexes here, but like we were in like a mess of a situation. How are you playing it, Ivan, short term?
Oh, I'm bullish. I think definitely there is more room in the indices and individual stocks. The one main thing that changed last week is sentiment. All of a sudden, we started to see a positive market reaction to bad earnings reports. And Netflix, I mean, Nvidia was just one of the examples. They missed estimates. They guided lower. They went up 20% after that. You don't see that, when the sentiment is poor. So definitely, sentiment had reached some extreme weakness, and now it's just mean reverting. And then we're seeing something similar in the most shorted stocks in various industry, like Dick Sporting Goods and
you just like saying Dick.
UPS, like all of them are like 30% of their float is short. Like they had horrendous earnings. They would gap down 20, 30%, 40%, and they would just close the gap or like browse. So this is a major change in sentiment, seeing that recovery.
Yeah, people willing to buy into that gap. No, that's why I'm glad this is a good spot to end it. If you are short, there was so much aggressive short selling by the same people that were Momo long by young people. I was talking to some Snap friends that trade, and they were like, "Oh, my friends are like buying puts, like short-term puts, and killing it." And it was just one data point on top of like the true sentiment analysis, but I learned a lot today. Ivan, that's a good way to end it. Shiv, we'll have you back.
Yeah, thank you, Shiv, for coming. All right.
Well, thanks, guys.
See you
Awesome
guys.
being on.
See you guys.